Hey everyone, welcome back to your weekly market outlook. This is the 27th of May, obviously the last full trading week of the month of May. So let's get started with a quick recap from last week. So obviously we have some bank holidays on Monday last week, taking a little bit of the liquidity out of the market there. And we have the Canadian inflation number. And for the Canadian inflation number, we want to focus on the TRIM CPI, and the TRIM CPI does fall down a little bit, but it is as per consensus from 3.2 to 2.9% at very least. It is below 3% for the Canadian inflation there. And then the next focus is definitely going to be the RBNZ. RBNZ cap rates at 5.5%. However, the comments coming up from them was a little bit more on the hawkish side. They did mention the potential for more interest rate hikes should inflation continue to it's continued to be high and refuse to come down there. Then we have the FOMC meeting minutes, pretty much the same hawkish tone there. There were actually considerations for a potential rate hike there, although we do need to keep in mind the FOMC meeting minutes there. That was from the previous meeting, the FOMC meeting, and post FOMC meeting we did get a comment coming up from Jay Powell that they are not looking into hiking interest rate hikes. However, the meeting minutes did consider a potential for more hikes for the year 2024 should inflation remain sticky. But the general note here is that it is going to be really hard for them to start cutting interest rates. Inflation is sticky, so they prefer to keep interest rates higher for longer. Same message there, a little bit more on a hawkish tone there once we dissect what's the FOMC meeting minutes there. Then we have the UK retail sales number. UK retail sales number here down a lot, negative 0.5% was the expected outlook there. We got negative 2.3%, and then we have the UK inflation number. UK inflation number does fall down quite significantly, 0.9%. However, it is still above the consensus, coming in at 2.3% versus 2.1%. Okay, so for this week we have UK bank holiday on Monday, as well as US holiday pretty much for the Memorial Day on Monday. So we're expecting the American market to be a little bit more on the quiet side, expecting Monday to be a little bit more muted in terms of volatility as well, and we are basically going to be wrapping up the month of May, so not looking at a lot of fundamental activities at this point in time. We have the Australian retail sales number, we have the Australian inflation number, and for Australian inflation number here, expecting a slight drop, 3.5% to 3.4%. If we do get a higher reading, then we're not expecting the RBA to start cutting interest rates this year. Even for now, the expected first cut would probably come in November, and if we have a higher inflation number, we're definitely not expecting a rate cut coming up from the RBA. So that could actually be bullish for the Aussie as well, right? And then we have the preliminary CPI numbers coming out from Germany. We're expecting a little bit of a drop here. Monthly growth expected to drop from 0.5 to 0.2%. And for the Euro number, for the flash estimate of the CPI numbers, we're expecting a little bit of a pickup in inflation. That's going to be released on Friday. We're expecting a jump up from 2.4 to 2.5%. Core remaining the same at 2.7%. Midweek, we are going to be looking at preliminary GDP numbers coming out from the US, and that would be a slight drop in terms of growth from 1.6% to 1.3%. And then we also have the Canadian GDP at the end of the week, as well as the PCE numbers coming up from the US. And for the core PCE, we're expecting the growth to slow down from 0.3% to 0.2%. All right. Moving on to the technicals, the Aussie USD first. Aussie USD, we're looking at 67 cents as pretty much the cap. This is something we talked about from the outlook last week. And in terms of whether or not there's actually going to be a trend for the Australian dollar, this is actually pretty stable at this point in time. If we're looking at the range here, we're looking at a stronger support coming in at 65 cents. We're looking at a little bit of an intermediate support at 66 cents, and we're still looking at 67 cents as the cap for the Aussie USD. The Euro USD though, like what we say last week, we expect a little bit of a pullback closer to 1.08. I think the market has done that. We did pull back closer to 1.08. We do find a little bit of support at about 1.0810. Right now it is finding a little bit of resistance at 1.0850. We expect price to might push a little bit higher at 1.0850. If that's the case, then we're still looking at price to be traded between range of 1.0850 to 1.09. Regardless, we still have a very strong support at 1.08. In fact, if we take a look at the thickness of the Ichimoku cloud itself, the support will range from 1.0725 all the way up to 1.08 for the Euro USD. Okay, so for the pound USD, this one here has refused to do that pullback. In fact, this one has pushed higher above 1.27. We're still looking at a little bit of a support coming in at 1.27, but in terms of how long this is actually able to maintain a position above 1.27, that's basically the question for this week. In terms of potential target for the pound USD, we're still looking at 127.2 extension there, pretty much at 1.28 to 1.2825. So judging by what we're looking at here, we might actually have a little bit of a drive towards that level first before we see any correction. However, if this week we dip below 1.27, then we anticipate that scenario that we talked about last week, where we anticipate a little bit more of a pullback towards 1.26. And obviously, if we take a look at how thick the Ichimoku cloud is, we're anticipating very strong support there, 1.26, 1.25, 1.2550. These three levels are going to be your key support level for the pound USD. So keep an eye out on the pound USD whether or not it is actually going to drop below 1.27. But regardless, I think the trend has changed for the pound USD, similar to the Euro USD and Aussie USD. We have transitioned above the Ichimoku cloud in terms of how far this one can go. We're still looking at a projected target at 1.28 to 1.2825 for the pound USD. And lastly, we have the dollar Japanese yen. Now for the dollar Japanese yen, last week we talked about the dollar Japanese yen staying in range between 154 to 157. Now there are interesting developments here. We had the G7 meeting over the weekend here, and in terms of potential intervention, there were talks about the Ministry of Finance in Japan and Bank of Japan looking at the looking at the currency market again. However, we're not getting a good response from Janet Yellen here. So the US Treasury is basically not into the intervention side of things that's being done from Japan. So in terms of whether or not the US is actually going to help out, the US in fact kind of warned again that the intervention shouldn't be used as easily like that unless it's kind of urgent. So for now, we're not anticipating a potential intervention from the Ministry of Finance or the Bank of Japan. In terms of interest rate differentials, obviously we're still looking at a huge interest rate differentials here between the FOMC and the Bank of Japan. So in terms of whether or not the Japanese yen is still going to get pressure, I think that's still going to be the case. In terms of carry trades, this is still alive and well. Now, for dollar Japanese yen, we did find a little bit of resistance at 157. So we saw a little bit of a reluctance in the market to take it above 157. So for now, I think we might see a little bit of profit taking happening, but we do have support at 156. Now, the reason why we're looking at 156 is actually 155.50 to 156. This was actually the previous resistance trend line and the previous support trend line that formed the symmetrical triangle that was broken last week. This is where the support is actually going to converge, and that's also where the Ichimoku cloud is located. So for now, if there is a correction, if there's a strong rejection at 157, we still anticipate a potential pullback here, a max at about 155.50, but we should see demands coming in at those levels there, 155.50, 156. I think this is going to be a strong demand for the dollar Japanese yen. We might see a lot of market participant buy back in onto the dollar Japanese yen, so we do expect this to be a strong support level, and from that point onwards we might see another retest of 157, potentially a move higher towards 158, 159 in the near future for the dollar Japanese yen. But in terms of trend, overall there's no change in trend for the dollar Japanese yen. This is still above the Ichimoku cloud. Support wise from the Ichimoku cloud is still very thick, so we anticipate 155.50 and 156 to be a strong level for the dollar Japanese yen. We anticipate more demand around this area, so we anticipate a little bit of a bounce back if there is that correction for the dollar Japanese yen. All right, so with that, good luck with your trades this week, and I'll see you soon.